475, median priced home. Yeah. Still have 26 days of inventory. We did list 48 homes, 475 and under, which gave us 731 homes, 475 and under. So that's about 29-30% of the active single family homes. That's good. That's good. That's the median. That's where we're at now. Yeah, everybody. We're selling it. Well, excuse me. April we sold 131 homes every day, and that was compared to last year when last April was just a phenomenal month. We sold 164 homes. That was off the charts. Of course, the median price back then was $365. So big difference. The median, or I'm sorry, the average, I can't get my act together this morning. The average, the sales that we're doing every day right now for the year is 125 sales a day. That's not bad. That's really not a bad number at all. The $1 million homes, the luxury market, wow, it is hot. That luxury market is hot. We have sold 637 homes, luxury meaning $1 million and over, and we're doing about 5 1/3 sales a day year to date. We have 571 homes available, and that is a lot of available $1 million homes, but they're not staying on the market that long. I did some research over the weekend. I saw maybe maximum 60 days. And there was a couple that are really far out there, but they're really high priced, and maybe the sellers want too much. But talking about sellers, let's talk about sellers for a second. This is a great time for you to be, I know I'm a broken record, right? Be telling your farm, look at the equity. I mean, if they bought a home at the beginning of the year, at the median price of $425, they've got $50,000 in equity already. That's amazing. That's almost enough to buy a investment property, depending on their financial situation and their credit scores and all of those items. But this is something that you need to be using this chart when you're talking to sellers, when you're sending out items of value to sellers. They need to know that they have equity, and how long is it going to last? I mean, it's like, I'm starting to feel like the stock market. I mean, it just can't go on, right? Eventually, something's got to correct. So right now, if you have a farm, hopefully you do, or if you're just getting a farm, hopefully you are, that you will start telling this message that they have equity that they can use. And if homes are going to, and who knows, if homes are going to continue to increase, now may be the best time to sell and then buy, because they want to live in the payment, not the price. So, and 6%, 5-6% is not the end of the world. That's what we're looking at this year. It's not the end of the world. When I got into this market in 1987, the interest rates were 15%. Try talking to the seller about how they're going to lose money because they have to pay a commission. And back then we used to quote 7% expenses to close the house, 1% for your title and your escrow fees, and then 6% for the commission. That was a hard sell. But back then, that was it. And I know I can't talk commission. Sorry. Forgive me, FTC. But anyway, we were in that, I can't talk commission. Oh my gosh, Jimmy Diggs going to scold me. Anyway, now it's a different ball game. Now they're talking, about how much they're going to pay us or not going to pay us, because look at the difference. Last year, if you sold a home, median priced home, $365, you were making $10,000 plus. This year, it's a different story. You're making $12,000 plus if you're talking in the normal commission, which I'm not going to mention the number because I get in more trouble. But anyway, so sellers understand that. And are we working any harder? I see people's numbers going up, way up from last year. Now, I think the iBuyers made a big impact last year, if you want to know how I feel about it and what I look at and see. But this year, you've got to be telling this story. And I want to tell you that in the paper yesterday, we'll talk about this for just a minute. The Vegas housing market sits on stable foundation. That was the message from Andrew Smith, where he did a special report on real estate. And here's what he said. So listen carefully. Are we in another bubble? When is the big crash coming? Should I sell my house right now? And these are a few questions that probably every realtor hears regularly from friends and acquaintances and clients. So it's no secret that the housing market in Southern Nevada and the entire country can be said to be booming. Well, part of that's because of inflation. I'm just adding what I've learned from Brian Buffini. He goes on to say many homeowners, the length of this period of growth is at a point where the feeling of satisfaction kindled by increased equity is giving way to worries about when will it end. And we were just talking about that. And he's saying that as well. Those living in Las Vegas during the Great Recession and its aftermath are particularly sensitive to this unease, and rightfully so. Now, unease, I don't know if it's unease. It's just that we just don't have a crystal ball. This applies to individual homeowners, but also real estate agents, contractors, home builders as well. Thankfully, the market sits on a much more stable foundation than it did nearly 2 decades ago. And we all know that, right? Here we are right there. The prices were $120,000. Yeah, for a medium-priced home. Quite a growth. But I think everybody has to realize that they were at $120,000 because of the foreclosure crash. That cut the equity in half. And that's why we had the big short sale market. And for those of you that haven't been in real estate for 2 decades, I think you probably need to read up on that so that you understand that we are really progressing, back to about 2019, we were probably back where we were in 2004 and 5. So it's, I don't know, I'll run the numbers perhaps and see where we would be if with normal appreciation right before the foreclosure bust. And I will go back a few months because right before the bust, the prices were going up astronomically and with no reason. So if you haven't been in this real estate industry that long, I will do a chart for you and I will show you. I will compare where we were when it was a reasonably stable market before prices started to increase because of the people being able to get loans and realize that they could come to Vegas and, and no matter what their job was, how much money they made, they just did stated income and got a loan. So that inflated the prices quite a bit. That's not what we have today. So I think perhaps, and I'll get Jimmy to voice in on that maybe tomorrow or Wednesday, and we'll talk a little bit about putting things in proper perspective. Anyway, Andrew goes on to say, while the focus in the media has mainly been on the numbers since the start of the pandemic, the market has been building momentum for quite some time, and you can see that right here. Southern Nevada finally began climbing out of the depths of recession a decade ago. So if we go back to a decade ago, yeah, that's about right. He's about right. That's where I started. I think 2011 we started coming out of it. And housing metrics like new home sales closings and building permits pulled have been increasing basically every year since. On the resale side, the number of closings has fluctuated somewhat from year to year and began slowly showing a higher level of activity all the way back in 2017. Yeah, it started to jump pretty fiercely back then. So he's done his homework. On the resale side, the number of closings has fluctuated, yes. By now, most are familiar with the headings describing historically low home inventory along with rapidly increasing prices. And as we head into the spring selling season for 2022, let's look at a few market fundamentals. So he goes, and he's pretty good. He's doing a really good job, I think. He says demand is high, supply is low. And again, we couldn't be selling so many homes if the supply was low, but this is the bad message everybody keeps repeating. Our friends on the resale side of the market are still sharing stories of home sellings at or above list price within days, sometimes even before officially listed. Receiving multiple offers over list price is still a relatively normal occurrence for good listings, especially in the higher price ranges. He goes on to say that on the lower side of the resale price spectrum, we are hearing institutional investors are ramping up home buying activity, once again making it even more difficult for buyers looking for a home, roughly 400,000. We ourselves have tracked no less than 3,500 resales going to either investment funds or larger scale landlords over the past 14 months. Demand from buyers moving to the Valley from out of state continues to be a factor. Overall, the inventory of resale homes on the market remains dramatically low. And he says about 1.5 months supply. Well, he's not, when I give my stats, everybody, I'm talking about single family homes and condos and townhomes, but I don't come up with the same numbers. But then I'm not doing Clark County. So there's a difference. You have to, he says, moving to the Valley from out of state. Well, what is his Valley? Is that Southern Nevada? Is that Clark County? Exactly what is he referring to? So there's about a month's supply of inventory. Not a month and a half, but that's what I believe. Demand from buyers moving to the Valley from out of state continues to be a factor. On the new home side, local builders are doing all they can do to build homes fast enough. The familiar headlines regarding supply chain problems, material cost increases, and labor shortages are particularly relevant here. Now, it's like we say, the price of land has gone up, labor's gone up, the cost of goods, materials have gone up, so the prices of the homes are probably not going to go down because the builders aren't going to do it and lose money. So nearly every local builder has to self-regulate their sales by restricting the number of lots they release for sale because they must account for the inevitable delays and material cost increases that have become normal. And we were waiting for a header for retrofitting our garage, and we waited like 4 months because of the supply chain issues. Yeah, our header was sitting out there in the Pacific Ocean. Another major factor contributing to rising new home prices is the lack of available land in the Valley. Now, I'll finish what he says and then I'll comment. It may surprise some to know that all that desert around our city, the majority is owned by the federal government. Yeah, we understand that. It's been like that forever. So Senator Masto has introduced legislation in an attempt to help ease the situation. Now, this is something I wasn't aware of, but something that you should be aware of. But the timetable and the ultimate outcome are unknown. But we have, since I've been here since 1987, I've seen, I used to go down to the BLM office, I think it was on Jones, Decatur or Jones, headed north a little bit. Anyway, we would go down there to see what was coming available because we had investors that wanted to buy land for industrial products and so on and so forth. So it might be a good idea to take a trip down there and see what's coming up on the market. The other major factor that could have a serious effect on home sales in the short and midterm is rising mortgage interest rates. Again, yeah, they're rising, but they're not obscenely high. Rising rates not only hinder buyers from actively searching for a home, but they also can discourage homeowners from putting their homes on the market. And I haven't seen that. Again, I've been in this business a long time, 34 years, I think. I really haven't seen that. People want to move up, they want to move down, they're going to have a baby, all these things happen. And the millennials are coming into the market. So again, there's a lot of factors that go into some of his general statements that he's not really addressing. So many would balk at the thought of giving up the low rate they have locked in while purchasing or refinancing over the past number of years, only to get a new mortgage with a rate of 5% or higher. Yes, we know that. For the next few months, I don't expect much change in the way the market is performing. And I think he's probably right there. I think that's a good observation by someone who's not actually in the market day to day like we are. The ultra-low supply and the sustained demand will mean sales of both new and resale homes will remain strong. Of course, we've got a pent-up demand. They may sag a bit compared with 2021. We've already talked about that. We're not selling as many homes per day, but there will be no dramatic drop-off. As for prices, I again do not expect much to change. Resale closing price appreciation may soften slightly, but basically supply and demand point to the same. With new homes, dramatic increases in land and material costs will mean the price appreciation in that sector will continue. Yeah, I think that's about all he had to say. Nothing that we don't know, but this is just to let you know what the people that read the newspaper yesterday or that have the digital version of the RJ, this is what they heard. And the good news is, even though he didn't address it directly, there is no bubble, there is no crash coming, and not everybody should go out and sell their houses. And that's how he started out. And of course, we're not going to do that. And when you look here, we've had price increases. They've gone up substantially over the past 2 decades. Turn my phone off. So not a lot of nothing new. But anyway, that's what the public is reading and hearing. And I think if you follow it up with that article, it's in Sunday's Review Journal, and the author was Andrew Smith. And I think it's maybe a good article to keep in your notebook and or maybe in your email, or send it out to people. But I'd also send this along with it to give them an idea of how much equity they have gained. If somebody bought a house in 2017, I mean, they made $207,000. They didn't quite double. Let's see. If you bought a house in 2016, then it looks like you probably doubled your money. That's pretty cool. Yeah, that's pretty cool. That isn't that long ago. That's 5 years ago, half a decade. Anyway, so that's what's going on in our market. I hope to see Jimmy this week sometime, and we'll get his take on. We'll look at where the market would be had we not had the foreclosure crash, but we still had increase in appreciation, which would be more normal. And we'll probably look at some of these numbers too, and maybe we'll put another column in here that says the amount, the percentage of appreciation year over year. Okay, everybody, we had a little project for everybody to do over the weekend, and that was to get your LinkedIn and your Facebook and your Instagram profiles and bios up to date. Hopefully you did it. Big changes coming with some of these platforms, and you want to make sure that everything is all beautiful, updated, so that you can do your Google business page. And we'll talk about that too. Love you all. Have a great day. And it's another day in paradise and beautiful. Oh, forgot something. Oh, it's not in front of me. What did I do with it? We have a class this week. It's contracts. Let me go get it really quick. Yeah, while we're here, so that everybody knows what's going on. There it is. I'll tell you what, things are jumping. Okay, here we go. Yeah, so Thursday from 10 to 1, disclosures. Do you understand them? This is a great class. It's a new class that Jimmy and I wrote, brand new. You can sign up at b.vegas. You need six credits for contracts to renew your license. So this is a great class to take because it's nothing that you've heard over and over again from perhaps other educational institutions. We try to keep our classes relevant and up to date and entertaining. So be there Thursday, 10 to 1. You can sign up till about 9:30 on Thursday. If you don't know what your schedule is, don't worry. And also with our new format, you can sign up for many classes in advance. I think we're up through July, and sign up through July. And then if you have a change, just email agent@agentformula.com and you can change the class. It's not a big deal if your schedule changes. So we're very accommodating. We love you all. Have a great day.